Welcome back, guys. Today we're going to be looking at the ICT concept on the boom and crash market. So I'll be teaching you guys all of that. So see you guys right after the intro. Guys, there's gonna be a lot for you to actually learn in this today's video. All right, so basically what we are looking at is just mainly price action. So don't forget to hit the like button and subscribe to this channel. Turn on the notification on your YouTube and also follow us on the Telegram channel. So with that being said, now let's get started, guys. Let's get started. So let's zoom out completely. When we zoom out completely, we pick out the lows. Okay, so right here we have equal lows. All right, let me just mark that out right now. Okay, we have equal lows. All right, so we're marking it out kind of slow though. So we have our equal lows here. All right, so when we mark that out, we wait for a shift of market structure, which we are going to be going to that right away. Right, let me zoom in now. Since we have already marked our low, we marked the low where the market is actually likely to respect. Okay, and you can clearly see that the structure of this market has actually been to the downside by the lows and highs which we have. Let me just mark that out a little bit. Okay, you see market have that impulsive move to the downside. It has a correction, an impulse again, has a correction, an impulse, correction, impulse, correction, impulse. So to the place where we have equal lows, okay, because the market did not break below that area. Right, so with that being said, now what we're going to be doing next is marking out the shift in market structure and then wait for us to get entries. Okay, so right here we have a break of that area, which indicates what? Market structure shift. So that means our bias of this market is no longer to the downside, so we'll be looking for buying opportunities. So all right, let me just write that out, put it at the top. Okay, so this is perfect, guys. This is actually perfect. All right, so now let me mark my supply zone. Right, I'm gonna mark my supply zone because I don't see any fair value gaps. Probably there is a fair value gap on the hourly time frame, but let me just mark this area out. Okay, because in the future the area seems to be more important. All right, the area seems to be more important. Right, so right now let me go to the hourly time frame and readjust my mark out that level. Okay, you can clearly see that on the 1 hour time frame we have a fair value gap which the market retreated into. All right, and we are looking at this now. You see, after the break of the market structure shift. All right, let's go to the 15 minutes, redefine everything, and then come back to the hourly and show you guys how to actually take those trades and make money from this market. Okay, let me show you guys. So we are getting there. Just be patient, guys. Be patient, guys. Be patient. So you see, let me redefine it, which I have done that. We have a fair value gap. The market retreated back into it. Now let's go back to the 1 hour time frame. Okay, so you can clearly see now that market has actually come back to the fair value gap, and if we pick a Fibonacci from the swing low to the swing high, we can clearly see that we have a 51.8% retracement, and then 51% retracement, and then let me mark it out. You see the candle which prints at a fair value gap. That's a very powerful candlestick pattern, which if you take the trade is gonna be profitable, guys. It's gonna be profitable. 80 to 70% of the time it's gonna be profitable, guys. So now let's pick up our 2. You see You take the trade, the stop loss just right below it. All right, and then you can target the next supply zone. Okay, for in this particular case here is our supply zone. Let me just mark it out. It's our supply zone because that's the last bearish engulfing candles stick before the market actually dropped to that low. Okay, and after the break of that market structure shift, after the break of that market structure area, all right, push to the downside. So that candle was the cause, and that made it our supply zone. All right, so now what we are going to be looking at next is what we're going to be looking at next. What we're going to be looking at next is what? All right, let's look at something here. So right here, the market came back again after hitting the target. So what we are going to do here is just try to track the market structure and then see if we can get an entry. All right, showing you guys how I've done it. So just follow, please be patient. Ladies and gentlemen, just be patient, guys. Be patient. So now let's just go back in time and get to that area. So let's get back there. All right. I wish this trading view had replay like the trading view on for currency has. I think it would have been better. So but we're here now. So now let's take a look at this now. All right. So there was a shift, market structure shift, right? MSS. So there's market structure shift here. Okay. Let me zoom in so I can clearly see this whole thing. All right. There's a market structure shift. And then the market had to come back to our demand zone, which was created, that led to the breaking of the market structure above that area. So when the market does that, let me delete the whole of that so that it will simplify the whole thing. Okay. So when the market returns back to that area, you can clearly take your trades. Okay, you can clearly take your trades. All right, you can take your trades from there. But in case you don't want, you can clearly wait for a better structure, just like this, a break of that after the break of the market structure BOS, because the new high that was created there is our BOS. Let me just mark it out. Okay, I'm just gonna mark that out now. So that our BOS has been broken. So you can take your trades after the break of the market structure. Remember, we have the market structure shift and the break of market structure. They are two different things. So right now we are just going to readjust. Go to the 5 minutes time frame. All right, try to see what we have there. All right. So let's see what we have on the 5 minutes time frame, if we can get any clear entries specifically. All right, so on the 5 minutes time frame now, I can clearly see an entry from this 5 minutes time frame. Okay, so there's a shift of market structure shift on the 5 minutes time frame. Remember, whatever is happening on a bigger time frame also happens on the smaller time frame. So now the market will turn back to that low. Okay, that actually caused the break of the market structure shift. Then you take your trades, guys. You take your trade. So please, and then go to the 4 hours time frame, back to the 4 hours time frame, and let the whole thing play out. Okay, so right now you see what happened. You would have had a break even on this particular trade, even though it would have worked out pretty well. See, the market came back to it, but did not take us out. After it went for a while, then it came back, guys. Let me just readjust that a bit. It came back, took us out at the break even. Okay, took us out at the break even. So, but still, yet we are still going. You don't give up. Okay, you look for the goal here is to minimize the downside, that's the losses, and then to maximize the wins. Okay, since that's the goal, that's the motive. Right here we have another break of market structure. There's another high has been created. So, but before that high was created, there's a demand zone being created here. We have our demand zone. So since the demand zone is being created, what do? Just zoom in, away from market structure, shift on the smaller time frame. Could be the 15 minutes time frame, could be the 5 minutes time frame, but just make sure you see that there's a market structure shift. Okay, and then if you go down to the 5 minutes now, you actually see that clearly well. So let's go down to that we're in the 30 minutes. Let's go down to the 15 minutes. Yeah, let me zoom in. Okay, I wonder why it's actually refusing to load, but let's continue, guys. So okay, 15 minutes. Yeah, so we're on the 15 minutes time frame now. So now let's go back in time. So after that, after the market structure shift, the market had to return back to our supply zone, our demand zone, sorry. So at this point, you can still take this trade, guys. You can still take this trade. Right? You can still take the trade. Still same targets, stop losses still below the structure, and then you're aiming for the highs. Okay, you're aiming for the highs. You see, this time around it played out really nicely well, but without actually coming back to the entry. It played out nicely. It was nicely done, guys. Just nicely done, guys. So you learn how to track the structure of the market. So when you understand that, the whole thing becomes what? Easy and simple. Now let's look at the Boom 1000 index. So for the Boom 1000 index, I have the whole thing marked out, but I'm just gonna go ahead and just clear that on the chart so that you guys can be able to follow me, so that you would understanding matters. Okay, so I'm just gonna delete the whole thing. We'll do it from the scratch together. Please, guys, don't forget to hit the like button, subscribe to this YouTube channel, follow us on the Telegram channel for me to be bringing more and more wonderful content like this. All right, so right now we have the whole chart cleared out. We are looking at plainly a naked chart. Okay, this is absolutely beautiful, my people. This is absolutely what beautiful. So right now we go ahead and just mark it out. All right, so right here what we have is a liquidity grab. Okay, there was a grab of liquidity because the market actually went above that area but did not trade above that area for long, and then came back to the downside. And then if you're looking at this whole thing here, all right, there was liquidity grab, okay, which is that area above there. All right, let me just put some things in place here. Let's go to the 60 minutes time frame. Okay, let's go back in time, guys. So right here we are here now. So now we want to look at the whole thing. Okay, so before you can actually anticipate to take a trade, here we have market structure shift. Above there we have above that area there was liquidity. Okay, we have market structure shift. Let me take it down to the bottom. Okay, all right, market structure shift, and then below here we have a break of market structure. BOS. Okay, I have a break of market structure, which is a BOS. All right, so now since there's a break of market structure, we have to mark out our demand, our supply zone. Okay, supply zone. In this case, there's no fair value gap to actually work with. So, but we still work with the supply zone. The supply and the demand zones actually work very well too. So right now we can go to the 30 minutes time frame. Try to see for ourselves what is actually happening on the 30 minutes time frame. Okay. So now let's go down to the 30 minutes time frame. We are on the 30 minutes time frame now. Okay. So on the 30 minutes time frame, what can you see? You can clearly see a supply zone. Okay, for supply zones we are looking at for sales, and then for demand zones we are looking for buys. So right here we have liquidity grab, because the market took out that high but did not trade above that high, but later left a rejection candle on the 30 minutes time frame. Still yet you can take that trade based on that candle alone, but I'm just going to show you, because if there are instances where there is no candlestick rejection, so that you just get to understand the whole thing. All right, take that at the top. All right, so now we are going to go down to the smaller time frame. All right, could be the 5 minutes, yeah, could be the 3 minutes, whichever one that offers what clarity and reduce the ambiguity, all right, of the whole system. So right here, let's look at this. Let's zoom in a little bit. So be patient, my people. Be patient. I'm giving you something awesome, something beautiful, something wonderful that we actually change trading for you. So, after the grab of that stop loss and then the rejection of that candle, you can clearly see that the market did not continue trading up. So the main purpose of that move was just stop losses. So we have a market structure shift, okay, and then there's a fair value gap here on the 5 minutes time frame. So the market trade, you put just sell limit, market just trade into that fair value gap. Your stop loss is above that area, the previous candle. All right, so now you go back to the 60-minute time frame, just let the whole thing play out. So this is absolutely beautiful. You see how the whole thing played out. Stop losses very tight, everything checked. All right, you see the whole thing just traded, the whole market just traded to the downside. So this is a very wonderful strategy, guys. So it's a very, very wonderful strategy. Don't forget to hit the like button, subscribe to this YouTube channel. So see you in my next video.